So now that 2021 is almost over, what are you telling your clients regarding investing in portfolios?
Well, as that great New York philosopher Yogi Berra was thought to have said, it ain't over till it's over. So 2021 still got a couple more weeks in it, maybe a couple more surprises. I think my gut feeling is 2022 should be really good. It may not start well because as you mentioned in your introduction, markets hitting record highs, it wouldn't be surprising to see people do some selling in early January. But I think that might be for longer term investors a bit of a head fake. What has kept markets going so strongly, if there's a single thing, it's been low interest rates. What you alluded to the last little bit was that central banks, which control short-term rates, may look at doing something to curb inflation, and that's something maybe to raise rates. But we'll see if there's a one-to-one correlation between somewhat rising rates and a difficult stock market. I'm not sure that there will be a perfect correlation there.
All right, lots to keep our eyes out for, Brendan. Well, we know the last day for tax loss selling is Wednesday, December 29th. Settlement is Friday, December 31st. So why are these dates important to investors in particular?
Well, this year it may be more important than ever. Maybe. I would be surprised if the Canadian government, I'm not suggesting this is a hint, Christia, Justin, I'm not saying you should do this, but I wouldn't be surprised if capital gains tax rates were raised in 2022. At present, capital gains only attract half the tax that income does. So if you buy or sell a stock or a property or French wine or a group of seven paintings, it doesn't matter. If you realize a capital gain, you get taxed at half the income rate. But I wouldn't be surprised to see that rate ratchet up. So you may see people wanting to sell in 2021 to avoid whatever tax hikes might be coming next year. The thing I would pause about, though, is that any investment decision ever done for tax reasons, possibly in the history of the world, I might be overstating the case, but not by much, any investment decision done for tax reasons turns out to be a mistake because you can't anticipate the tax, and just because you do something for tax doesn't mean it's a good investment decision. So it's important if you want to take tax gains this year, and I think a number of people will be taking tax gains looking forward to next year, but only do it if you have compelling personal reasons to do that, not because you're trying to get ahead of the tax man, because whatever they end up doing will probably surprise all of us.
All right, Brendan. So how should investors prepare their portfolios for 2022?
Well, assuming you come to the market completely uninvested, you're looking at me and saying, Brendan, these markets are at record highs. What should I do? And my answer to them is something. Now, whether you're fully invested or fully uninvested, I think you should do something. If you're fully invested and you say, Brendan, in the next year or two, I'm going to need X amount of money, and I want to make sure that I have the capital to pay for that, then I would say, let's sell a little bit of what you have. Maybe it's 25% or 20% or some number, just to take some money off the table. But I think even more importantly, if you've got no money invested, start with doing a little bit. If you have an amount of money that you're going to invest, take 20% of it, 25% of it, and start now and do something. Because either way, if markets go down or if they go up, you'll at least be in a good headspace. Because if markets go down and you need to buy more or sell more, no problem, you've done something. And if markets go up and you need to buy more or sell more, you've done something. Once you've done something, the next right thing becomes that much easier. Investing is really less about numbers and more about psychology, and particularly one's own psychology. So for most people, the right thing to do, particularly for younger people, start a monthly contribution plan. Start a pack where you're putting a little bit of money aside every month.
And we'll be right back.